Ladies and gentlemen, good day and welcome to H1 FY24 Results Conference Call of NewJaisa Technologies Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisors. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to NewJaisa Technologies Limited H1 FY24 con call. On the management side, we have Mr. Vishesh Handa, Chief Executive Officer, and Mr. Ashish Nirmal, Chief Financial Officer. Now I hand over call to Mr. Vishesh Handa. Over to you, sir.
Thank you, Kaushik. This is Vishesh here. Hello, friends. I extend a warm welcome to all of you for the H1 FY24 conference call. This is our first conference call post the IPO, addressing you all. And before we delve into the financial performance, I would first like to brief you about the business of the company. NewJaisa Technologies, we established in year 2020, and we have been keenly focused on selling refurbished IT electronics directly to the customers. We understand our responsibilities towards a circular economy and a sustainable environment, and hence we emphasize on reducing electronic waste. Having this mission, we sell high quality refurbished electronics like desktops, laptops, monitors to our customers. As we are selling refurbished products, it puts us on an advantageous position by meeting the demand at a lower cost and yet being able to provide a high quality electronics to our customers. We provide quality electronics with guarantee. We provide a 1-year warranty to all our customers, and we cater to various customer segments. This includes your individuals, institutions, and SME businesses as such, right? To meet their electronic needs while helping them to save on the overall cost structure. We have been consistently for all the last 3 years seeing a very strong demand of refurbished products, and with our quality service, we are really happy to share with everyone that we have been serving almost 1900 cities in India, right? And 19,000 cities in India. And so far we have sold more than 75,000 refurbished units across India. With our vision to reduce the electronic waste and also enhance the electronic lives with guaranteed quality and prompt service, and support a circular economy and contribute towards a sustainable environment. This is one of the trends which we see is not only pretty evident globally, but also in Asian countries. For example, Asian countries has been seeing an exponential growth in demand for the refurbished products, right? With the growing, and largely these are being driven by the growing focus on the sustainability and the circular economy. And refurbished products are the ones who are propelling this particular trend forward. This trend is, and in India too, what we have witnessed in the last 3 years is this trend is really picking up a strong momentum, right? Being one of the fastest growing economies, the country is ripe for these new opportunities, and there's tremendous growth potential in the market for the refurbished items. Major global businesses have started to realize the reuse and recycling have turned into a major points of consideration now with most of the big corporates, right? By encouraging refurbished products in the market, the nation will fuel greater progress in the economy, even aiming to firmly tackle environmental challenges which have long been prevalent threat to the life on this planet. India is seeing a stellar uptrend on the refurbished markets, and the expectation is this market will grow at least double in size by 2025 itself. Especially now, tech-enabled products are leading the way, which is pretty obvious in that sense, right? The unpredicted demand for reconditioned products has marked an all-time high in the nation. And largely COVID, for example, we started our business in COVID, and we have seen this with global COVID-led pandemic has led to an exponential increase in a work from home culture and hence the increase in demand of such products by the retail customers and also from the most of the companies. Also, we want to call out that typically we are able to provide this the high quality products just as good as new at a price range which is markedly at 30 to 40% discount from a new product. Now let me take some minutes to talk about our financial performance for the first half, which is H1 FY24. Continuing on our 3 years of growth momentum, right? Our H1 FY24, we continued with a similar momentum. Our top line grew by 86%, comparing it on an H1 to FY23 to FY24 basis, which was as per our growth plan trajectory. In terms of our gross margins, we saw a even better improvement, which stood at around 92% year-on-year improvement. We reported an EBITDA of 4.06 crores for H1 FY24 with a top line sales of 26.75 crores. So our EBITDA on an year-on-year H1 to H1 comparison basis almost increased by 50%. In terms of yes, I mean, most of these growths are largely driven by the huge uptick in the demand that we continue to see in the market. We reported a 39% of rise in our net profit, and our net profit stood at 2.90 crores for this particular H1 FY, which is at a 25% year-on-year growth. In terms of earnings per share, we reported a 2.45 earnings per share for this particular H1. Just to call out on a couple of things as in terms of finance, right? As I highlighted, top line grew at a very robust pace of 86%. And at the same time, in terms of gross margin, we saw even a better improvement, which stood at almost at 92%. Key reason for the better improvement in the gross margin is our improvement in the operational efficiency or reduction in terms of the spares that we use, which we were able to derive through our better operational, being able to repair more parts than to replace them. In terms of the slight dip, which was in terms of our EBITDA and PAT, this has been in line with what with our expectations and the plan. The key drivers for the same, so we saw approximately 3.5 or 4% of drop in PAT, right? The three key factors driving that, one was an increase in the employee cost. Employee cost increase contributed to approximately 3% of the margin impact. This is aligned with our plan. I'm also very glad to share that at the start of or the end of the last financial year, our headcount stood at approximately 250 employees. H1 FY24 ending, we had an employee base of 555. We continue to increase our employee base to cater to the large demand and to expand our operations to be able to cater to that. So this is as per in the plan line that we proactively hired more people, and being slightly labor intensive business, it does take people. There's a ramp plan which eventually showcases on the margin. Second key factor that there was a 0.8 impact because of the financial cost. This was again intentional because for us H2 is a very significant or the key cycle in terms of financial year, where that's where the Diwali season and other things comes, and we always ramp up our inventory to get prepared for H2, and that in turn reflects on our increase in the financial cost as well. So these were the two key reasons where we saw a dip in our EBITDA. And largely to summarize, I think these are the investments that we are making for the long-term growth that we are envisaging as such. Couple of other key proceedings or the highlights for H1 FY24, which I'd like to share with the group. In October, our new facility, which has 35,000 FFTO space, which can cater to almost 550 to 600 new employees, has become fully operational. While we are also maintaining our old facility, which is of 18,000 SFTO space and can cater to 300 employees. This place has been fully made operational in the month of October, just before the Diwali season, and has helped us to cater to the Diwali demand. Other key proceedings for H1 was we continue to look at different channels that can help us in robust growth of our revenue stream. Two things that we want to call out is that we continue to engage with schools and colleges. We have been able to close on two significant deals with two pretty large colleges and one with a very large NGOs. We strongly believe that the value proposition that we are providing is very strong, especially for the education sector, and we continue to see a lot of interest coming from this particular sector. And like, we are pretty delighted to have started these large engagements with them. Another significant aspect to share is, as a company, we call ourselves as technology driven, and we continue to invest in technology heavily. In a month, we will be rolling out our ERP 4.0, which is the next version of ERP. We strongly believe that it will further help us to scale our operations and significantly improve our operational efficiency. At the same time, help us to build better financial controls in that regard. Also, as we prepare for the scale, we have been able to close on the important leadership positions in H1. Ashish has joined us as our CFO. Sharat Somani, who comes with a 22 years of experience from Western Union, has joined us as a CSO, CMO. And Mr. Bhaskar, who comes with a 30 years of experience on the technology front, has joined us as our CTO, as a Chief Technology Officer. With a strong team and our CapEx showing good results, we strongly believe that we are now in a good position to scale the business at the momentum that we have been able to continue for the last 3 years. Of course, I would like to express my sincere gratitude to all the significant stakeholders who have shown faith in our business and have continued to support us. We are very confident that with this growing macroeconomic factors and our ability to put the right team and the investments in place, we will be able to continue at a significant pace. With sincere thanks to each one of you, now I request the operator to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devrat Himmat Singh from Augmenta Asset Manager. Please go ahead.
Hi Vishesh, fantastic performance. Really happy to see what you guys have done and how you're building up the team. Just have a couple of questions. One is, if you can just shed some light, because from whatever I understood, the challenge going forward for us is procurement. What are we going to be doing to solve this issue? Because the second thing is, on a macro front, most of the work is done, or most of the refurbishing is done out of places like Dubai and Bangkok. How do you see this shifting to India, and why would it shift to India? Like, if you can just throw some light on this.
Sure.
These are my questions.
Sure. Thanks, Devrat. Thanks for your kind words. I think both are good questions. So, taking the first question with respect to how do we ensure that we are able to procure depending on the demands that we are seeing. Couple of things that I want to call out is that we are have been cautiously working on that front, right? So key things that we want to share is, one of the things that we continue to track is how many of our purchases are happening directly from the corporate fund. And I'm happy to share that even in H1, we continuously keep seeing that that trend continues to improve, right? So from where our purchases from the corporate stood at around 15 to 18% in last year, now it is somewhere around 22 to 25%. Key factors, I think, what will drive this, and another significant development that I want to share is that we are also closing on a leadership position who will help us directly procure from the corporate. So our strategy here will continue to be work with the top corporates in India, right, and build that continuous supply of the assets, right. Looking at the India macroeconomic picture for the purchases, right, at the end of the day, corporates are consuming around 50 lakh to 60 lakh assets every year, right? So that's the kind of the numbers that we are talking about that should ideally be coming out every in a churn of a circular economy and every 3 to 4 years of churn, right? So macroeconomically, we feel there's a significant opportunity in terms of like the numbers being available there, and so we look at, when we look at purchase, we look at direct purchase from the corporates working with the OEMs, looking at the leasing companies when these assets comes out of it, and we are continuously working with them in terms of securing this pipeline at a much more strategic level. Right? Now, coming to your second question, like how does the global, as you rightly mentioned, right? I mean, Dubai, Sharjah, these are like currently the hubs for refurbishment for a global supply chain perspective, right? With the developed nations being the feeders, right? And the developing nations being the consumers. How does we feel India can strongly play a role? I think it plays on all the 2 or 3 aspects. One, definitely, I mean, we all know in terms of cost of in terms of human cost, right? So labor cost in India is significantly almost at a 30% price point as compared to these particular areas, right? So, and repair as an industry or refurbishing as an industry has almost a 3x labor elasticity as compared to assembling a new laptop, right? So, for example, I'm pretty sure if you compare our employee cost as percentage of the overall cost structure versus a company making new laptops, it's on a higher side, right? So this industry inherently is labor intensive, which we strongly feel it gives an edge to India. Second key factor again is in terms of skilled labor force, right? So I think at the end of the day, even in these places, the source of the skilled labor force continues to be India, right? So in that regard, what I feel is we have a large resource pool for skilled labor force, right? Third key aspect that which we strongly believe is our investment in technology to build it as a scalable solution, right? So besides the cost advantage, we feel that the technology that we are investing in, the processes that we are investing in, will make us ready to not only be able to lower the cost just because of the human factor or the labor factor, but also build that platform to do these things at scale. Having said that, as of today, there are certain, the government regulation challenges to directly get used assets into India. There has been a policy change, FTP policy change, foreign trade policy change in this particular financial year, where government has allowed on a pilot basis for the used assets to be brought into India, refurbished in India, but has to be sold outside the country. We personally believe that this is a landmark pilot, and we do actively look forward to work in tandem with government to see how this can be taken forward, right? We feel that if we are able to get those regulations in place, India should ideally be the right place to become a global center of excellence for refurbishment as such, for the kind of the technological competencies that this country provides, and also for the cost advantage as a country that we provide.
Thank you. Thank you. And one last question, sorry. Just want to understand. So I mean, how if say OEMs were to come and do this themselves, do you think would they end up doing it? Like, say, for example, would an HP or a Dell could they do this in-house, or would they outsource it? Like, just want to understand what your research on this entire thing says there.
Yeah, right. So I think whatever discussions we have with the OEM, I think the whole DNA of a repair and refurbishing as such, right, as a business is very different from a new business, right? So we do definitely look at OEMs as more of a collaborative partners because we are one of the channels that can help facilitate them sell new assets, right, to the corporates because of the churn, because of circular economy, right? And like the way we look at it is that definitely OEMs will be looking at competent partners, right, to provide high quality assets to the retail customers, then to get into this whole business, largely from the operational complexity perspective and also from the perspective of direct competition with their main product, which is a new product as such, right? So they would be more happy to look at the exchange offers to drive the sales to the corporates for this, right? So that's the kind of the view that we are getting from the markets, right? That if at all, it could be potentially down the line, it could be more of a co-branding kind of an exercise, right? Where they would like to collaborate with a partner who can do justice to their brands, than to go solo as such.
Right. No, got it. Thanks so much, Vijay.
Thanks, David.
Yeah.
Thank you. The next question is from the line of Swapnil Kabra from SK Enterprises. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Sir, I just wanted to understand, do we have any internal aspiration or any kind of guidance you can give with respect to the top line and the margins for this year and the next year?
So as a policy, we do not give forward-looking guidelines, right? We have been able to see a strong momentum for the last 3 years, right? I think in the macro level, we see a continued demand in the market, and we will always try to put our best foot forward in terms of being able to cater to that.
All right, sir. Sir, and can you also share some EBITDA margins with respect to the different segments you cater to? For example, the professionals or the college-going students or the B2B side of your business. Is there any difference in the EBITDA margin here?
So good question, right? So I think largely the margins remain more or less the same across segments. When it comes to bulk deals like with SMEs or school colleges, right, we do see a 1 to 2% basis point difference here or there, right? But largely we do not differentiate in terms of EBITDA margin when it comes to retail professionals or this, right? So it's pretty much flat in that sense.
All right, sir. So last question from my side. Sir, with respect to the Diwali sale, I guess our H2 is very, H2 is heavy compared to H1. So can you share some color on the H2 part of our business? Because I guess there was this notification that you put that the Diwali sale, the record sale this year. So can you just share some highlight on that part?
No, absolutely. Right. So historically, that's what we are seeing, that H2 typically because of the festive season, this is Dussehra, Diwali, Christmas, followed by, New Year, and then your Republic Day sales, right? It's typically always a stronger season, and also because of our a growing growth momentum on a month-on-month basis, right? So historically, we have seen that there's a split of anywhere between say 35 to 65 between H1 to H2 to 40 to 60, a kind of a ratio between H2 and H1, right? So I think this year also whatever trends we see, yes, I mean of course this year's Diwali it was as per the expectation, of course the biggest season that we had across all the 3 years that we have been operating. So we are very hopeful that this H2 should continue with a similar trend, which we have been seeing in the last 3 years in terms of H1 to H2 ratios. So the similar momentum we are seeing, and I think in terms of our ability to cater to that demand, already those investments have been put in place to be ready to cater to those demands.
All right. Sir, do we see any other month similar to Diwali where you see higher sales, for instance, 26th January or any other day that you could, boost your sale by giving some discount?
Yes, yes. So we continue to run those campaigns, right, from time to time, right? So, for example, I mean, come March, April, that becomes, like a student season, or like starting of, like, that's where we see a lot of traction coming from the students. Christmas, New Year, typically because of financial year ending for many of the corporates which are aligned with the global businesses, right? And we continue to build our campaigns around these themes. Right now, we are running a Black Friday sale. I'll be more than happy to bring that to everyone's notice and do consider if you are planning to do certain purchases. So yes, I mean, from time to time, we do run these campaigns, Christmas, New Year, Independence Day, right? Prime Day by Amazon is a big event as such for us.
All right, sir. All the best, sir. And I'll join with you for more questions.
Thank you.
Thank you. The next question is from the line of Deepak Chokhani from Rade Capital. Please go ahead.
Hi, Vishesh. Congrats on the success of your IPO and to promote such a unique company in a short span of 3 years. I have two questions.
Sure, Deepak.
I don't need an estimate for this year or next year. I can understand about your policy. But can we get some broad picture? What's your vision for the next 3 to 5 years? On a big picture basis, like, I don't know how to quantify, but let's say 500 crore top line, or where do you want to see yourself, or where do you want to see the company in the next 3 to 5 years?
Right. I think, good question. I thanks, Deepak, first of all, right? Good question, Deepak. I'll try to share our vision for the next 3 to 5 years, right? When it comes to numbers, I think we would like to see that if we are able to continue with the similar momentum that we have built for the last 3 years, right? For the coming 3 to 5 years. In terms of like how do we foresee us as a company in the next 3 to 5 years, or where our vision is, in 5 years down the line, I think we would love to be known as a globally acknowledged, like a refurbished company focused on the electronics segment, right? So the way we look at it is that we love to go deep, build those competencies, and then we would like to see if there's an opportunity to leverage these competency at a global level, and also look at different product diversification on a similar electronics category as such, right? So that's how I think like our 3 to 5 years vision looks like, that we should try to become a significant player, making a significant contribution in terms of reduction of the e-waste, at the same time, improving the digital accessibility across globe, right, in the next 5 years. So that's one of like the visions we are looking at. In terms of concrete numbers, as you said, right, I mean, we don't prefer to make any forward-looking statements, but I think we do aspire to continue a strong momentum that the team has built in the last 3 years. We do understand that, there's a huge opportunity in terms of market size. And if we continue at a similar momentum also, right, we might still not be in like next 3 to 5 years, even like a 4 to 5% of the overall opportunity size as such. Right? But yeah, I would prefer not to give any numbers guidance as such.
Sure. No, that makes sense. Thanks for that, Vishesh. My last question is, any other related segments you would like to get in the near future, like for example, e-waste, or probably apart from the laptops, any other products, you would like to get into?
Sure. So I think, as I mentioned, there are two like principles on which we are working, that whatever we pick first, let's go deep, right, and then go wide, right. Having said that, I think the way we evaluate at the different product mix is definitely that once we have built those competencies, how we can use that competency and a similar supply chain in terms of purchase and customer segment, right, to cater to more like products, right. So having said that, yes, I mean, though we haven't like put in place in terms of concrete product line roadmap, but definitely there are many products that will qualify for these criteria. For example, we are always looking at IT peripherals that includes your, like your Wi-Fi's and printers, and also looking at tablet as a category, right? And so on and so forth. Right. So when it comes to product diversification, yes, I mean, at the right opportune time, right, we would continue to look at different product lines and add them whenever we feel we are ready to cater to a new product mix. But these are like some of the examples that I would like to share in that regard.
Perfect, Vishesh. Thank you so much and all the best.
Thanks. Thank you, Deepak.
Thank you. The next question is from the line of Chinmay Rane from Cogent Finvest. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to understand now our total staff strength is around 800 plus. So with this new facility, what one can project with the staff strength of 800 on the top line basis? Can be related to the number of employees, the top line?
Thanks for the question. In terms of employee base, I think the only thing I want to share here is that there's always a lag in terms of training and getting people to the full speed, right?
Mm-hmm.
Having said that, yes, I mean there is you can say there's always a correlation in terms of, because being a labor intensive business, there is a correlation between your employee strength and your output that you can produce as such.
Having once it is in fully operation or once your staff scale is fully put to the skill set, what kind of a revenue we can fetch?
With this particular base? Right?
Yes, with this particular base. Like now we are recently employed is around 550 people. Having them to the full strength of their capacity, what kind of a revenue we can expect?
Right. So we have an employee to a throughput ratio of almost 0.5 to 0.7, right, on a daily basis, right?
Okay.
So in terms of top line, right, I mean, it will definitely take time, right, and I do not want to make any forward-looking statements as such. But yes, I mean, we can expect on a daily basis and a product throughput of anywhere between 350 to 400 units.
Okay. And sir, just regarding to the government policy or as compared with regarding to the e-waste, is there any particular life has been mentioned for this electronic item of which we have to discard or the refurbish unit? That is what is helping us to get this refurbishable stock for the sale?
So you are saying that our government policies pushing this refurbishing demand, right?
Yeah, basically any useful asset life of an electronics, say what business we are into, like computers, laptops and all. So if there is a particular life has been mentioned, generally it is 5 years, but it is regulatory things which is there, which has to be, sold or which has to be taken out of the system, and then you can do the refurbish, which can be again put back to the use.
Right. So in terms of government policies, I think the policies are with respect to e-waste policies are already in place, right? Yes, the awareness of these particular policies and also the proactive behavior from the corporates towards sustainability, right?
Mm-hmm.
I think these are two key factors, and also I think the cost implications, right, that are making, I feel, corporates much more responsible in terms of what is happening with their electronic waste, right? So I think, yes, I mean, at a macro level, right, maybe 10 years before, right, people did not worry that much about discarding their e-waste, especially corporates. Right. But we do see that, a sustained cautiousness, right, coming in most of the corporates to ensure that e-waste is handled appropriately, and B, if it helps in extending of the assets, right? So yes, and our government policies, I would say that yes, I mean the government policies has played their role, but if you benchmark it against the developed nation, I think India has still a long way to go, right? So we are still talking about 40 to 50 lakh assets being consumed by the corporates, and I'll be surprised if 10 to 15% of them are being judiciously discarded in a responsible way right now, right? So this trend, we strongly believe, will continue to extend in that regard.
And that will provide a huge scope for a company like this.
No, absolutely, yeah. Right. I think, gradually, I think across globes, you will see these policies from being directional to becoming more of a compliance-led, right? And as and when the move towards that, right, it becomes like a must-have rather than good to have, right?
So my next question is like when we source from any OEMs or any corporate, is there an obligation again to sell back to them?
Not necessarily, no. So we are a product-centric company, right? So in general, as of our first preference is always to own the asset per se, because we want to control the end customer's experience, right? So yes, even if such deals happen, we keep them mutually exclusive.
Okay. Sir, and now with our total staff strength of 800 plus, how much are the skill workers who are basically into the engineering side and how much is on the sales force?
Sorry, I didn't get that. I think the signal was not right.
Out of our total staff strength of around 800 plus people, how many are the engineers working towards refurbishing also, and how much are in the sales force?
Sales force, yeah. So our sales force continue to be very nimble because we are online first company, right? So as of today, I think our sales force constitute of probably 9 to 10 people only, right? Largely, most of our workforce is in operation. When it comes to sales, we are always looking for scalable online first platform driven or direct to large channels like SME and these, right? So most of them would be in the operation side, and they will be blue collared along with some technical engineers as such.
Oh. And so my last question is, we have sold to around 19,000 cities, 19,000 cities. So where exactly our sales is concentrated? Is it in a particular state or we sell across India?
Yeah, so I think as we mentioned in our DRHP also, so we see a pan-India, demand because we are online company, right? Having said that, because of being based out of South, which is Bangalore, I think the South is contributing approximately 35% of our overall top line, right? And of course, the East always, for any company is the lowest, right? But we see pan-India demand. And I won't attribute that the demand of 35%. It's more of the tyranny of location in the sense, right? So as we continue to build more distributed channels for supply, I think demand for the other regions will also significantly pick up. But it's very diversified as such, right? Only 30-33% is from South, and approximately some 20-25ish from North, and 22% from the West, so on and so forth. It's pretty diversified in that sense.
Okay. But there won't be any cost on the logistics when we are moving out of India.
Yeah. So I think one good thing with the electronics or the high value items is that your weight to value ratio is very biased, right? So overall cost of logistics to the overall value, right, is not that high.
Okay. And so my last question is, I might have missed on your opening remarks. So these two facilities, one is of 80,000 square feet and one is of a newly opened 35,000 square feet. Sorry, 35,000, right? The 35,000 square feet. So they both are in the Bangalore itself, or we have in a different?
No, both are in Bangalore. They are almost co-located in a way, just 3 kilometers away from each other. I think our business is also a business of scale. After a particular a point, it does make sense to add a different facility as such.
And both these facilities are on lease?
Sorry?
Both these facilities are on lease or it is our own facilities?
Both are leased.
Yes. Okay, sir. Thank you so much and all the very best for your business. I'll come back in.
Thank you for the questions.
Thank you. The next question is from the line of Nikhil Chandak from JM Family Office. Please go ahead.
Yeah, hi, thanks. So, couple of questions. One is, as you keep growing more in size and scale, how do you manage your, working capital? That is one. What are the levers to really improve that? And would you need to do any kind of future fundraise to kind of fund your working capital? The second one is, quite a few articles about how the brands themselves are also getting into the refurbished space. So whether it's HP, Dell, and articles talking about they wanting to open stores, to focus specifically on the refurbished laptops, etc. So from a competition perspective, if the brands themselves get into it, what do you think in terms of what it can, whether it can have some impact on your business? These were the two questions.
Yes, absolutely, right. So thanks so much for the questions, Nikhil. So first, with respect to the working capital, right, as you rightly mentioned, I think ours is a working capital heavy business because we own the asset, we get the assets, we refurbish them, and then we sell these assets, and there's a cash cycle in that regard, right? Having said that, I think we do see opportunity across this particular supply chain or the cash cycle chain, right? So starting from on the purchase side, right? So right now, most of the purchases are on cash or pay because it's on a bidding system. And that's where when I was talking about being building more of direct purchases from the corporates and building those strategic relationships, we strongly believe that can help us with some in terms of credit cycles there. I think the largest chunk will come from more of an operational efficiency. For us, the last 3 years has been dedicated in terms of building the technological know-how, right? But at the same time, we are now very squarely focused in terms of reducing the operation cycle and bring at least trying to bring a 20 to 30% improvement in that regard, right? Third key factor which leads to our working capital or cash cycle also, because cash cycle in turn is leading to higher working capital, right? Is from the account receivable perspective, right? So being an e-commerce kind of a model, right? So there was a 14 to 15 days of dependency there. As we continue to diversify our channels, get into more of direct sales and directly collaborate with school, colleges, SME, we feel there is a strong opportunity in that regard also to reduce on the cash cycle, which in turn will help us to reduce our working capital requirement, right? So I think when I look at working capital requirement, I'm looking at the overall cash cycle, and I think we have opportunity across all the three areas, which is the purchase, operations, and the AP, AR, and the operations as such. And
unlike most, say in general, what e-commerce models you have in India, obviously they are not in the same sector, but most are marketplace models. Whereas yours is a complete inventory-led model where you will actually buy the inventory, refurbish it, and in turn sell. So, I mean, even if you have levers, this will be a perpetual issue, right? Because you'll buy the inventory today, you refurbish it, and by the time you sell it, it may take whatever days, 30, 60 days, for example, or 30 days, for example. Unlike for other e-commerce companies, there is no inventory risk at all, which they carry. So, is this something which should always be there, this issue?
Yes. So I think right from the day one, I mean, that's a call, right? Because I think it's always a compromise between value addition, right, and the asset risk, correct, right? So because in a marketplace model, I think the whole concept largely entails around of, not much of a value addition, but distribution as such, right? So, but we were very clear that because it's the start of the industry per se, and in terms of being customer focused, we have to do a lot of value addition in terms of delivering top quality, and that particular part we can only do when we own the asset and invest in terms of value addition, and also in turn manage the customer experience, right? That does mean that our model is just a technology-led, an app-based model, which is very asset-light, right? And I think, that's one of the key risks we have always highlighted in our DRSP. I think from the industry's perspective of creating this as a category, our personal belief is that yes, it will for some time will continue to be an asset-heavy business because we strongly believe that yes, whatever the incremental cost of that finance is there, the value addition that we do gives a much better, right, and significant returns, right? I think Lenovo just came out with their results. It will be very it will be like a good case study to look at the net margins, right, versus our net margins, right? So yes, I mean, it's a cautious call as a company that we have taken, that we don't want to be just an aggregator or a trader of the assets, right? But be more of a value addition person, so that we are able to establish this as a category. Right.
Perfect. Great. Thanks. And on the second part, on the competition part, where the brands themselves are wanting to get into, in some fashion by opening stores, etc.
That's a good question, right? So I think that a couple of ways we look at it, right? So I think, for example, HP made an announcement that they will be starting with the refurbishing business, right? For us, it was like kind of a great validation in terms of what we have been trying to do for the last 3 years, right? That the more it's being acknowledged by the brand of this being a mainstream market as such, right? Having said that, yes, a couple of like patterns that we have, because we have been like working very tandemly with the OEMs also, right? And that relates to the first question which was being asked, right? I think like OEMs would rather look for like collaborators right now, right? And we do look up to them in terms of being complementary in nature, right? So be it in terms of lending the brand or in terms of purchase of their old assets, right? Right. So in that regard, I think it will help. Secondly, I think it's a large market, right? In India, still the penetration is only 13% in terms of overall PC holding, right? And time and again, what we have seen is that once like more a category becomes mainstream, it helps all the players as such, right? So there are two things. Like we strongly believe that the OEMs will look for more of a collaboration. Even right now, we know that, for example, the HP refurbishing, the scale, and it's more of a collaborative effort than an going solo effort as such, right? I mean, for the market reasons, I cannot like share the names as such, right? And secondly, I think there's a large market. The brands coming into this will showcase, will help to further increase the size of the pie itself.
Understood. Perfect. And the last one, this was, maybe it's more noise, but I thought it's best to clarify this. Just before the IPO, there was a lot of press about some kind of a legal issue in terms of some complaints, etc. Now, the articles were also sketchy, and I don't want to believe the article in its entirety because, it's misleading. But I thought it's just best to transparently get an update from you. What exactly was the issue on hand, and is that settled out?
So I think, let's say, first, we have already given a official statement on the same. So we strongly reject all and any allegations as such made. Besides that, I would leave it to the readers, right? Assuming the timing and the other, the content of the same. Given that because the matter is sub judice, I will not be able to comment on that. But we are looking for we have taken our own aggressive stand on that. But because the matter is sub judice, we cannot comment on that.
No, perfect. Perfect. Great. Thank you so much. All the best. Thank you.
Thank you, Nikhil.
Thank you. The next question is from the line of Nagaraj Chandrasekhar from Emerge Capital Opportunities Fund. Please go ahead.
Hi, good afternoon, and thank you for taking my question. I think following up with the prior participant, I wanted to ask it in a slightly different way. I think the issue is not with OEMs doing what we do, but others starting off trying to do what we are doing from scratch, like you did 3 years ago. So can you talk about the tech advantages and edge that you have built up over time? You said in your presentation that you have L3 refurbishing capabilities. What really are these? How difficult are these to sort of, understand and fully implement? And what all do we plan to do in the next 2-3 years to make our sort of advantage much larger than what anyone entering can sort of get into?
Absolutely. Thanks, Mr. Nagaraj, for your question. I think it's a very, very pertinent point that you have raised, right? So I think we have been consistently saying that our operational competency driven by tech is our key mode, right? As you rightly mentioned, I think refurbishment as an operation itself is very different as compared to a regular manufacturing. As you can well understand, I cannot delve into too many details with respect to what and how exactly we do. But just to share a few examples, right? When we started, we looked for an off-the-shelf ERP or a technological solution, and it was just not available in the market, right? Because this as an industry never existed, right? So your regular BOM, TPCs, and the regular concepts of manufacturing do not really work here, right? Having said that, I think for us, the last 3 years has been rightly, as you mentioned, has been keenly focused in building those technological competencies, which we strongly believe, right, gives us a much bigger and a stronger edge as compared to any competitor, right? And it will, will be a challenging process as such to build those levels of competency and being able to do it at the scale, right? And we operate at each component levels, right? Because of, various reasons, I would tend not to share details in a public forum. But yes, we strongly believe that the technological competency, processes, operational, and even the hardware competencies that we have built, we have done a lot of things which are ground up and are not that easily replicable as such.
Understood. Thank you. I think one more question on the size of the market. You mentioned 50-60 lakh unit sales, purchases of laptops by corporates. I think the total pan-India purchases of laptops, for example, is around 15 million or 3 times that, or 20 million odd per year. And obviously, you mentioned that the recycling hubs being Dubai and Sharjah probably do a lot more than that in terms of volume. Just want to understand how much they do in terms of throughput on an annual basis, and who are the large players there doing this business that, we can, this government is generally very logical. India should be the place to do this given labor arbitrage. So just wanted to get a sense of the market that is captured. Thank you.
Right. At the global level, right?
Yes.
Yeah. So I think a couple of names that I am aware of, for example, ComSale is a Canada-based company, so they are pretty big in terms of refurbishment, right? And yeah, I mean that's one of the big names on the global front, right? There are other players from the US, but again, I think ComSale is one who is also focusing on the refurbishing, right? So there are others like liquidation.com, but they are more of a trading or aggregator platform, right? So yes, I mean, I think there are a couple of big players who operate at a global scale. Having said that, I still strongly believe at a global scale level also in terms of refurbishing, the market is still not that organized, right? So there are a couple of players who are doing significant business, but right, I mean, there's no major consolidation as such when it comes to refurbishing capability. And again, I think that leads to the same point that doing refurbishing at scale, right? The operational complexity and the kind of the technological stack that you need to build, right, is not that easy, right? So yes, but there are a couple of players who are operating from Canada and they have their offshoots in Dubai and are operating at a reasonable scale. In terms of opportunity, I think India as such in IT is 8% of the overall global economy, IT purchase and consumptions, right? So global opportunities we can extrapolate in that regard, right? So, but yes, I mean, we strongly believe in terms of when we are building those competencies in the scale, I think the idea is we always ask ourselves that can we scale it to 10x, 15x? Do we have the underlying technology? Do we have that operation which can be is repeatable, scalable in that regard, right? So we do strongly believe that we should be able to build that advantage over others, right? Because it's not that easy to do these things at scale, right? So yeah. I hope it gives you some sense, hopefully, in terms of scale.
Yes, it does. Thank you. All the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one per participant. The next question is from the line of Puneet, who is an individual investor. Please go ahead.
Thanks for the opportunity, sir. I just wanted to understand any inventory which is not moving for 6 months at your site.
Sure. Yes. So that's one, I would say good, but right now it's like 0%, right? Because it's a very demand-driven market as such, right? So luckily for us, it's like, like there's no much of a dead inventory, and we do take requisite steps to make sure, because I think these are like one of the benefits that we get because we are directly linked and connected with the market, so we really know what is selling, what is not selling. So before we even purchase, we know what the market demand is as such, right? And having said that, I think I think that's where the product market fit comes into picture. Right? So the demand always surpasses in terms of what we are able to produce as such, right? So right now, I think the oldest inventory which we will be holding will be around 50 to 60 days. That's also because we got a large volume and we did a bulk deal of those particular units, but they're selling pretty healthily as such, right? So there's no dead inventory as such. Having said that, being in the refurbished business, we have a 2 to 3% of scrap ratio, right? But all of those are already baked in when we do our purchase.
Okay. So just a small follow-up question on the same part. So what is the maximum capacity or maximum number of laptops we can sell in a day? It's like 1,000, 2,000. What is the current capacity we have?
In terms of sales or operations? Sales.
Yeah, sales basically.
Right, yeah. So I think, during the festive season, we have seen the numbers go very significantly, very near to 4-digit numbers also, right? But I don't believe that's the regular a sale, our capacity. But I think in a high 3 digits or over 400, 500, 600 units is very much possible depending on how much we are able to produce. Right, but that's the current capacity. In terms of demand, it's very high. I'm talking about our capacities in terms of current sales.
Sure. Thanks a lot. I will come back in the queue if time permits. Okay.
Thank you.
Thank you.
Thank you.
The next question is from the line of Bharat Reddy, who's an individual investor. Please go ahead.
Thank you. Hello, Vishesh. Congrats on good numbers. So my question is, it was mentioned that for FY23 during Diwali sales, you made highest of 1 crore per day. So is it safe to assume that you made 1 crore for that whole Diwali week?
This year?
For FY23.
Yeah, so I think I was last year you were talking about or this year? This year.
Last year.
Yeah, so that's just one of the KPIs. The first day itself we hit a 1 crore in last year. The first day is always the significant day for Diwali sales, right? And so this year also we were easily able to surpass that for the first day sales.
Okay. So I have one more question. So you said H1 contributes roughly 40% and H2 60%, right, in general, over the last 3 years. Since new factory is operational, can't H2 beat H1 by a good margin this year?
So we, as per our company plan, right? So I think it does take time to ramp up the teams, right? And we are looking at a similar or slightly better target as such.
Okay. And there is a company called Rocking Deals. So is that competitor to NewJaisa or a partner to us?
In a way, partners. We have done some collaborations earlier. As I said, they are more of a marketplace, right? They do a back-to-back trading, right? So sometimes we do take spares for them. Sometimes they help us to liquidate our inventory, right? So their business is yeah. So they are not into refurbishing and or controlling the overall supply chain end to end, right? It's more of a marketplace for liquidation of excess or used inventory.
Sure. Thank you. Thanks, Vishesh.
Thanks for that.
Thank you. The next question is from the line of Mihir Manohar, who's an individual investor. Please go ahead.
Yeah, hi. Thanks for giving the opportunity. And congratulations on the entrepreneur journey and making it a 50 crore business in 3 years. That's really commendable. I just wanted to understand on the fresh issue, 40 crores. So what is going to be the application of that? Is the new facility which has been started using that number? And I also wanted to understand what can be the full potential revenue which can be there on the overall capacity which now exists. Second question was on the Diwali sales. You mentioned Diwali sales has been good. If you can provide some clarity around, what is the YOY growth that you have seen this Diwali versus the last Diwali, that will be useful. And the third question was just on the fact that, when we say this business, typically, a lot of players have tried in this business, but scalability has been difficult because the local players at the end of the day end up getting the market. So just wanted to understand, how serious are we about the scalability, because now even the OEs are also entering. So how serious are we about the scalability along with the same maintaining profitability along with scale? So just wanted to get an understanding around that.
Okay. So I think the first question was with respect to the facility, like the investment of this, right? So yes, I think with respect to the issue and the usage of the objective of the issue, right? So there were four object of the issue. One was definitely to support our working capital requirement to build the inventory, right? Second object of the issue was definitely towards the capex, right? And as we mentioned, that the facility is now ready. So it was more of a continuum, right? So we have already started investing on the same, and the funds which we received have also been deployed towards the same. Third key object of the issue was, as probably that ties to your last question in terms of how serious we are in terms of building this as a market, right? So the third object of the issue was towards marketing spend, because we feel we are now rightly positioned to create NewJaisa as a brand and reach out to as many customers as possible, and be the brand synonymous to refurbished electronics as well. So marketing was the third object of the issue. Fourth object of the issue was towards the technology spend. As I also highlighted, the group right now, that we are rolling out ERP 4.0 for us within a month, right? So there are other significant technology spends that we are doing in terms of our website improvement, app development, so on and so forth. So these are the four key objects for the issues, and we are working pretty aggressively. As you can see, the facility is already ready, but we have kept some quantum for the incremental facility that will continue to build as our capacity increases. On the marketing front, already the key tie-ups have already started. We are running our first campaign ever on Black Friday right now, right? And technology I just shared with the group. So that's how the objects have been deployed. We strongly believe that these are the things that will help us build the scale, and B, may help us become a known consumer brand in refurbished electronics as such, right? So, okay. And sorry, your second question was with respect to?
Sure, sir. I wanted to understand what can be the maximum revenue potential from the enhanced capacity, which is now, that is old capacity plus the new capacity. What can be the maximum revenue potential?
Right. Right now we are not in a position to make any forward-looking statement, right? But as I mentioned, we are looking at potentially we can do 350 to 400 units on a daily basis, right? And that's the kind of the momentum we should be able to build with the existing team. But we are continuing ramping up in terms of in terms of we are definitely looking at a 30-40% kind of a growth on a year-on-year basis, right? So that's second question.
Sure, sir. I just lastly on the Diwali sales. This Diwali versus last Diwali, how was the number?
So I think, as you saw in H1 to H1 comparison, I think we were able to maintain a similar momentum for Diwali also, right? In terms of Diwali comparison, right? So around 8%. Okay. So that's with respect to the Diwali, and I think your last question was with respect to again the OEMs coming into the picture, and when you try to scale, how these kind of. So from our end, I think we are very committed to build a consumer focused direct to customer brand, right? And to make sure that we are able to scale this as a brand and become a household name as such, right? So, and that's where we will continue to invest, bring more consumer awareness, and right from the first. I think that also ties to one of the other questions asked earlier, that we also get into refurbishing as a service, in the sense like we get that as a refurbish and give it back to the corporate. So as of now, we have not moved into that because we want to be a direct to customer focused brand. We have turned down a couple of deals, right? I mean, because we want to be more like customer focused. There are like lot of like plans and the marketing campaigns which have been already put in place to ensure that we get that reach in the coming years, right? And we do understand, right? I think one of the things when it comes to, like I do realize the concern that like for an SME after a scale, like reaching 100 is easy, reaching 100 from 1000 is different kind of a challenge per se, right? I think the only comment I would like to make there is that we do recognize those kind of challenges, and that's where we have significantly invested in terms of like leadership, like like the team, the cumulative experience that this team has. The top 4 guys have more than like 85 years of experience between them. Between us, we have managed more than $1 billion of business, right? I was with Google before this, right? I mean, with a significant revenue run rate. Sharat Somani was managing like $500 million of, like business there. So I think we do recognize it's not that easy. At the same time, I mean, I think we are gearing ourselves to be ready for, the challenges that might come to take it from 100 to 1000 as such.
Sure, sir, sure. That's it from my side, sir. Thank you very much. And it is really commendable that you have made a 50 crore business, and wish you best of luck for making very large in life. Thank you very much, sir.
Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Kaushal Shinde for closing comments.
Thank you everyone for joining the conference call of NewJaisa Technologies Limited. If you have any queries, you can write to us at info@kirinadvisors.com. Once more, thank you everyone for joining the conference.
Thank you.
Thank you.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.